Every trader begins with ambition. You enter the market with dreams of wealth, independence, and freedom. You imagine outsmarting the crowd, making quick profits, living on your own terms. I know that feeling, it's intoxicating. But the market is not a kind teacher. It's patient, deceptive, and unforgiving. It takes your weaknesses and magnifies them until you either learn discipline or lose everything. Today, I'll tell you about the 10 most dangerous mistakes day traders make, mistakes that have ruined fortunes, shattered confidence, and ended countless trading careers. I've made most of them myself. And if you don't recognize them in time, the market will make sure you pay the price. The first mistake is trading without a plan. Most traders wake up, check the charts, and trade whatever looks exciting. They chase price movement like a gambler chasing a winning streak. But trading is not gambling. It's a business. Every successful trade must be based on preparation, a clear plan outlining where to enter, where to exit, and how much to risk. When I began trading bucket shops as a boy, I had one advantage. I always recorded my trades and followed patterns. I didn't trade on emotion. I traded on setups that repeated. You cannot control the market, but you can control your process. Without a defined plan, you'll drift, and drifting in the market means drowning. The second mistake is overtrading. When you sit in front of your screen all day, it's tempting to trade every move, every tick, every candle. You start believing that more trades mean more profits. But the opposite is true. The best trades come rarely. The market rewards patience, not activity. When I made my first fortune, it wasn't because I traded constantly. It was because I waited. I learned to sit still when the market wasn't giving me a clear signal. Most traders lose money because they can't do nothing. They must always be in a trade. But the best position sometimes is no position at all. The money is made in the waiting. The third mistake is ignoring risk management. Every trade must have a predetermined loss limit. I used to say, it's not the thinking that makes money, it's the sitting. But before sitting, you must protect yourself from disaster. A trader without a stop loss is a gambler waiting to go broke. The market doesn't care about your opinion, your conviction, or your hopes. You could be right in analysis, but wrong in timing, and timing can destroy you. Never risk more than you can afford to lose. Never average down a losing position, and never argue with the market. When the price moves against you, get out. Don't rationalize. Don't pray. Just get out. The fourth mistake is trading on emotion. Fear and greed, those two words, summarize 90% of all market behavior. Traders buy because they fear missing out, and they sell because they fear losing. Both are emotional responses. I've seen panic destroy men who were brilliant analysts but poor at controlling their emotions. A trader must operate like a surgeon, calm, precise, and detached. The moment you feel excitement or fear, you're in danger. Your judgment becomes clouded. The market preys on your impulses. Remember, your greatest enemy is not the market, it's yourself. The trader who can master his emotions will outlast everyone else. The fifth mistake is revenge trading. After a losing trade, you want to win it back immediately. You double your position size, ignore your plan, and take impulsive trades. You think you're fighting the market, but in truth, you're fighting your ego. Revenge trading is suicide with a delay. The market doesn't owe you a win, no matter how much you've lost. When you lose, step back. Stop trading. Analyze what went wrong. The best traders are those who can walk away and wait until their minds are clear again. Discipline is the antidote to revenge trading. The sixth mistake is chasing the crowd. The market is a crowd of opinions, rumors, and emotions. The majority is almost always wrong at the extremes. When everyone is buying, prices are often near the top. When everyone is selling, prices are near the bottom. I learned this lesson painfully. During one of my biggest trades, I entered early, before the crowd saw what I saw. When the crowd finally joined, I sold to them. That's how smart money operates. You must think independently, even when it feels uncomfortable. The crowd gives comfort, but the market rewards courage. The seventh mistake is not keeping records. If you cannot measure your performance, you cannot improve. Every trade must be documented: entry, exit, reason, emotion, and result. Your trading journal is your mirror. It shows you your strengths, your weaknesses, your recurring mistakes. Most traders don't want to face the truth of their own behavior, so they avoid journaling. But I'll tell you this: the trader who studies his own record becomes wiser than one who reads 100 books. The market repeats itself, but it also repeats your mistakes until you learn from them. The eighth mistake is expecting constant profits. Trading is not a paycheck. It's a probability business. There will be drawdowns, dry spells, and losing streaks. That's normal. But most traders panic when they hit a rough patch. They think something is broken. They start changing strategies, indicators, and systems, chasing perfection. Perfection doesn't exist in trading. You can't eliminate losses, only manage them. The goal is not to win every trade. It's to survive long enough for your edge to play out. If you cannot handle losing, you have no business trading. The ninth mistake is ignoring market conditions. Not all days are meant for trading. Some days the market trends cleanly. Other days it chops sideways and eats traders alive. You must learn to read the rhythm of the market. When I traded, I would step aside when conditions didn't favor my setup. I didn't need action. I needed opportunity. Adapting to the market environment is what separates professionals from amateurs. If the market is unclear, don't force trades. Protect your capital and wait for clarity. The 10th mistake, and perhaps the most dangerous, is thinking you can outsmart the market. Ego is the silent killer of traders. Once you believe you're smarter than the market, you stop respecting it. You start taking reckless risks, ignoring warnings, and refusing to admit when you're wrong. I made and lost millions because of this arrogance. The market has more money, more patience, and more power than any trader. The moment you underestimate it, it humbles you. The market is always right, not because it's moral, but because it's final. Your opinion doesn't matter, only price does. Let me tell you something most traders never realize. The market is a mirror. It reflects your psychology. Every weakness you have: impatience, greed, fear, arrogance, will surface in your trading results. The path to success isn't just about reading charts or learning strategies. It's about mastering yourself. I've seen men lose fortunes not because they didn't understand the market, but because they didn't understand their own minds. I was one of them. I made millions and lost them because I broke my own rules. Each time I thought I was invincible, the market taught me humility. Each time I got emotional, it punished me. The lesson was always the same: discipline first, profits later. Discipline is what keeps you alive in this business. It's not exciting. It's not glamorous, but it's everything. The disciplined trader doesn't chase trades, doesn't argue with price, doesn't trade out of boredom. He waits. He follows his plan. He cuts losses quickly and lets winners run. He trades with patience and self-control, the two rarest qualities on Wall Street. Most traders fail because they never treat trading like a profession. They think it's a game of prediction, but trading is not about predicting. It's about reacting. You don't need to know what will happen. You only need to act correctly when it does. The market gives signals. It whispers, and the disciplined trader listens. The undisciplined one reacts emotionally and loses. Let me leave you with a truth that cost me years to understand. You don't trade the market. You trade your own belief system. Every decision you make is filtered through your psychology, your fears, your desires, your biases. The charts are the same for everyone, but each trader sees something different because each trader's mind is different. That's why trading mastery begins within. When you correct the 10 mistakes I've told you about, you'll already be far ahead of the crowd. Not because you'll never lose, but because you'll know how to lose properly: small, controlled, temporary losses that preserve your capital and confidence. Every great trader I've known was first a great loser. They learned to lose correctly. The market rewards the trader who can endure, who can remain calm in chaos, who can wait when others panic, who can cut losses when others hope. The market punishes the impulsive, the emotional, the arrogant. That's why the average trader loses, because he refuses to control the only thing he truly can: himself. I've seen fortunes made and lost overnight. I've lived through booms and crashes, through hysteria and despair, and the conclusion never changes. The principles of trading are eternal. Technology changes, platforms evolve, but human nature remains the same. The same greed, the same fear, the same mistakes repeated again and again by every new generation of traders. So if you want to survive, remember these truths. Trade with a plan. Manage your risk. Stay patient. Keep records. Accept losses. Control your emotions. Never chase. Never fight the market. Never think you're smarter than it. Let the market show you where to go. Don't try to tell it what to do. The road to trading success is lonely, difficult, and humbling. But for those who learn discipline, it can also be rewarding beyond measure. The market doesn't care who you are, where you come from, or how smart you think you are. It only respects one thing: consistency. Most traders spend their lives looking for the perfect system, the secret indicator, the shortcut to riches. But the secret is not in the charts, it's in your behavior. The trader who controls himself will always have an advantage over the one who doesn't. Every mistake you avoid is profit saved. Every emotion you master is progress made. Every time you follow your plan, you strengthen your edge. Trading is not about speed, it's about survival. The longer you stay in the game, the more the odds bend in your favor. One last thought. You will never conquer the market, but you can conquer yourself. And when you do, the market will reward you not with luck, but with respect. Learn from your mistakes, guard your capital, and never stop refining your discipline. That is how traders endure. That is how fortunes are built, not by brilliance, but by patience, self-control, and the humility to admit when you're wrong. Remember these 10 mistakes and never stop learning from them. Because in the market, the moment you stop learning, you start losing.